Welcome back, guys. Today, per fans' request, let's analyze Wanhua Chemical from a few different metrics. Wanhua Chemical is a world-leading manufacturer of MDI and TDI. Its MDI manufacturing capacity is more than some world-famous chemical companies like BASF and Dow Chemical. First metric is company size. Wanhua's market capital is 200 billion Chinese yuan, ranked number 1 in China's chemical industry. Its annual revenue is 170 billion Chinese yuan. Its size is pretty huge. Second metric, financial condition. Wanhua's current ratio is only 0.6. Its net working capital is a negative value. Its debt-asset ratio is as high as 66%. It's also got 2.1 billion Chinese yuan of financial expense. So overall, its financial condition looks quite unhealthy. Third metric, earnings stability. Wanhua has been profitable for 28 consecutive years. In the past 10 years, it's got good growth rate of 180%. However, in the past 3 years, its growth is not stable. Earnings actually declined by 19.7%. Next, let's look at dividend record. Wanhua has paid out dividend for 25 consecutive years, a nice long record. However, in the past 3 years, its free cash flow is not enough to cover its dividend payout, and its dividend yield is not that great, only 2.5%. Next, let's look at valuation. The past 3-year average PE is 10.6, satisfying our less than 20 requirement. The market capital is 68 times of its free cash flow. Price to book is okay, it's about 2. Return on equity, ROE, looks decent. It's at 19%. So the ROE to PB ratio satisfies our greater than 8 requirement. I also estimated its intrinsic value by adding up its current liquidation value with the next 15 years of total dividend. I got 41 yuan per share. So just looking at numbers, Wanhua's valuation is at a reasonable level. Now let's go through the good and the bad of this company. The good thing about Wanhua Chemical is that it focuses on a high-end, high-value product. Even though the chemical industry overall is not in a booming cycle, it made a bold move to vertically and horizontally expand its business. When the industry reaches a booming cycle, I believe Wanhua's technology and scale will have great advantage over other world-famous chemical companies. It should be able to reap very nice profits. However, the bad thing about Wanhua is precisely this heavy investment during a downturn cycle. It had to mount huge debts in order to expand, raising its debt-to-asset ratio to a dangerous level. Its financial is no longer healthy. If you are an investor who's very familiar with Wanhua's business, you may be very confident about its growth potential when chemical industry's booming cycle comes. However, as someone who's not in the industry, not so familiar with the company, I wouldn't dare invest in this company right now. I don't think it provides me with enough safety and peace of mind. How do you like this analysis? What do you think about Wanhua Chemical? Let's discuss in the comments. Stay tuned, guys.